right, now that we've covered some of the platforms and the communities that you should really immerse yourself in to get information, a good place to kind of base your knowledge and confidence on these platforms, protocols, and coins, now it's really time to focus on the information that you should be seeking when you're going into these communities. First and foremost is that you should really get comfortable reading white papers. If you haven't heard this term before, it's a semi-technical document that really gives you kind of a general walkthrough of what the team's intentions are, kind of their ideas on how to like technically implement it, a lot of the security around it, and a lot of other factors. You should be able to search the platform with white paper, and it should pop up. It should be on their website in a fairly prominent place, and if you can't find it, that's kind of a red flag. That should be something that's fairly disconcerting. A lot of teams I've noticed recently have been really rushing into the market. You know, they see these ICOs, they see a lot of money being spent, and they really don't want to miss out. So they'll come to the market with just simply an idea, with a dream, and they'll be looking for people to invest in it. A lot of these sound very attractive, but if they don't really have a technical basis or a means of implementing it, that might not necessarily be a good investment. You're really investing on kind of a gamble, even more so than the normal crypto market. So like I said, you definitely want to look for those white papers. A lot of people get easily overwhelmed because they look at these white papers, there's tons of math and statistics and cryptography, and it can really be kind of overwhelming and very difficult to get through. And I don't, when I say you need to get comfortable reading white papers, mean that you need to understand everything that you read in them. I think this is where it's really beneficial finding these like Slack, Reddit, and Bitcoin Talk communities, is because you can really leverage the knowledge of other people on those platforms to kind of fill in the gaps of your own knowledge. You can kind of read through and see if it's a unique value proposition, if you think it's an interesting idea, and then kind of go to these communities to really reaffirm kind of if they know what they're talking about, if they seem legitimate, if they've solved some of these technical problems. It's really valuable. Like, you have to sift through a lot of the noise because obviously in these communities you can't trust anyone, but you can usually get a general idea, of what people's opinions of them are, and if they do solve some of these issues, or if they have some very glaring security issues that would make you, a little less likely to invest. I know I mentioned the term ICO quite a bit. I'm going to be covering that in the next section, so don't worry. It stands for Initial Coin Offering. And what it basically does is it allows you access to some of these very early companies that you might not necessarily have access to. It really puts you in the realm of a venture capitalist or an angel investor or someone who deals with these very early companies. And if you're in this realm, you need to start doing the level of due diligence that they normally do. You see these large valuations because people want to get on the ground floor of these things and they're willing to kind of throw money into ideas, into a gamble. But that might not necessarily be something that's lasting. A lot of people have said this is a bubble, that is very speculative, that it's not really sustainable. We will cover that in our advanced lesson. If you're kind of interested in these general walkthroughs and these checklists and these ways of kind of doing fundamental and technical analysis of ICOs to see if they're lasting, if you want kind of a general walkthrough to see if it should be a short, medium, or long-term play, that's all covered in our advanced content. It's in a very easily digestible way that you can kind of follow and apply to any of these platforms, protocols, ICOs in the future to get a very good understanding of kind of what the investment should look like and how you should move forward with it. But for the scope of this course, we're just going to mention some things that we think are very important so people can best protect themselves when they're investing. Some considerations to make when you're looking at things. The second thing that I'm going to mention is the roadmap. Roadmap is generally most developers, most teams, when they come up with a product, they have what they want to get launched by the time they actually release, but then they also have goals that they want to meet at certain milestones. These can be very important to know. Just like any company, if they set these milestones, if they have these goals, most of them will be Q3, Q4, 2017. Some of them will be more specific and say end of June. If they are hitting those, that can be very reaffirming that the team knows what they're doing, that they're able to project kind of the requirements for them to develop and that they're able to execute on a timely manner. So I think that paying attention to these is very important, especially for coins that have already launched. If the team is able to kind of execute, if they're kind of maintaining and not pushing and delaying, it should kind of instill this sense of confidence, in the team going forward. They might not be able to execute the end goal, but it is kind of representative that they've planned things out, that some thought's gone into it. So that's one thing to consider. It also can often be a catalyst for a pump. So just be very aware if you're necessarily a holding or you're thinking of kind of buying into a coin that has a roadmap kind of milestone coming. if they're able to actually execute on that and achieve it and launch on time, it can be very good for the price. If they have to delay it and push it, it can be kind of a negative for the price. So just be aware of that milestones and roadmaps when you're investing in certain coins. I think one of the most important things currently is researching the team and advisors. As I mentioned before, you're getting in the realm of kind of venture capital, like pre-startup, like very early companies. So you want to be very cognizant of the team and advisors. Lots of venture capitalists and angel investors say that you're kind of investing in the team. You're not necessarily investing in the idea. Obviously it needs to be a unique, novel idea if you kind of want to support it. But a lot of times they'll kind of present something, and by the end they've had to pivot quite a bit, and so the end product will not really necessarily look anything like what they originally started with. So be aware of that. If they have a strong team and advisors, they're probably going to make it to the finish line. It's not really guaranteed that their product is going to look anything like what you necessarily thought it would, but you need to that they have a strong team and advisors who can carry on. If things fall apart, if they run into an issue and they don't have that strong team, things can quickly go from bad to worse, and then your investment can kind of go sour. So it's stay very cognizant of the team and advisors around it and when you're investing. I think the biggest thing that I really focus on is there unique value to kind of this proposal? Is it new and novel? There are some things that are very much needed in the space, that there are some copycats, some people who do it slightly better, but I think that it's very fundamental to kind of understanding if there's value in something by seeing what it does. I generally stick to it do I see a need in the marketplace? Do I think that there's going to be demand for it? And that's kind of a good way of just when you briefly start looking into something, just looking at the idea and then looking at the overall marketplace and seeing if it makes sense to you. And that kind of goes into my next slide. I think the really good walkthrough, we actually do this in the advanced course for you. So if you don't want to kind of take the time, if you want it very easily digestible, you can just look at that, and we very quickly kind of spell that out. But we basically take the time walking through the top 20 market cap cryptocurrencies, and we ask a bunch of questions, and it's just kind of familiarizing yourself with the space. The questions like, what makes them successful? What's their unique value proposition? Are the price movements often correlated between certain coins? A good example is Bitcoin and Litecoin. We cover more of that. Like I mentioned before, kind of that scaling drama is very important, and a lot of that can be kind of based on that sentiment or that general kind of psychological issue kind of between those two coins who are competing. I think how the coins were distributed, what is the inflation rate or the number of tokens, is it capped or uncapped? Does the company hold a large stake? Something kind of interesting covered is Ripple, who had a large amount held by the founders, and they had large issues with that until they locked up 80% of their tokens, which instilled a lot of confidence in the community, and it resolved a lot of those issues. So we cover those very in depth. We go through the top 20 market cap. I do think that it is extremely important to do something like that when you're first getting into the space, because it really gives you this fundamental basis of knowledge in which to base your new analysis off of new and up and coming coins. It might not necessarily be representative of future success, but you can kind of take what has made a coin successful and what has made a coin not successful, and kind of compare that and see the difference in teams and the difference in value proposition, the difference in market need. That being said, I definitely want to kind of clarify, some of them might be hyped. A lot of the coins that we cover in the top 20, maybe they don't necessarily deserve the market cap that they do. Maybe they have the market cap for some more complex reasons. We definitely cover that as well. So don't think just because they have a large market cap that necessarily makes them any better or worse. It's just a factor to really consider, and I think a good basis and starting point is that top 20. I'm showing here a quick screenshot of CoinCap that I mentioned in the beginning. I think it's really important to kind of go over. A lot of people tend to not necessarily see this, especially if they're very new to trading, the difference in market cap and share price. If you look at Bitcoin, the price per Bitcoin is $2,544, and the market cap is $41.7 billion, whereas Ethereum is $311, but the market cap is almost $29 billion. And a lot of people don't fundamentally understand that. They look at Ethereum and they're saying, why would I buy a Bitcoin that's $2,500 when I could buy Ethereum for $300? It's I could buy 8 Ethereum for the price of 1 Bitcoin. But you really have to look at market cap. If there are more Ethereum in circulation, there's almost 93 million, as opposed to 16.4 million Bitcoin, it's not going to be that quick for Ethereum to kind of surpass Bitcoin in price, because that would mean a significantly larger market cap, a significantly larger capital investment to get it there. So I think that's definitely something we cover like in depth and in the advanced course, just kind of that fundamental analysis of all of these different prices. But it's definitely a consideration. Just because you see Ripple at 26 cents, don't think that, hey, I think that it's better than Bitcoin. It's going to go from 26 cents to $2,500. So just be aware of that going forward when you're looking at these prices, and don't get like hyper focused on share price. I've noticed that that's a mistake that tons of people do, especially when they start trading.